Hello and welcome to the Teal Real Estate November 2016 Market Snapshot. And the figures this year have been incredible, and very shortly it'll be Christmas and the year will be done. But the September 30 figures, according to the REIV, are producing some incredible statistics. And one of them is the fact that Melbourne has grown in the 12 months up to September 30, 2016 at 9.1%. Now, home prices have grown considerably stronger than unit prices, and that's even reflected more strongly by an examination of the last 10 years. So over the last 10 years to September 30, the figures reveal that homes have grown at 85% in Melbourne and units only at 60%. Now, had units been stronger, then the old adage of doubling your money every 10 years would have proven to be true. But unit growth prices is a bit slower, and it's down as low as 60% growth over that 10-year period, and only 5.1 or 2% in up till the September 30 quarter. So that's really interesting to know that instead of properties doubling every 10 years, as you might have heard that old adage, it's now only at 85%. But Melbourne is still the single biggest dominating influence in property growth for capital cities. 83% in Darwin, Sydney is 80%, Melbourne is 85%. So ahead of the pack once again in all of those capital city growths over 10 years. Now, when we look at those figures a little closer, it's all about the zeros, and the zeros are 100 properties. First time ever 100 properties, in fact it's 104, have reached the $1 million median price in Melbourne, and that's unbelievable. Now, over recent months, probably for the last 3 or 4 months, I've been suggesting that there is upward pressure on Brunswick, Brunswick East, Ascot Vale, all to achieve the $1 million mark, and they actually have. So, I mean, it was just about following the trend of the line that they would ultimately get there. But Moonee Ponds, Ascot Vale, Essendon, Strathmore, all of these suburbs now, where Essendon is our mainstay here in this area in the northwest of Melbourne, but Brunswick, Brunswick East, we're strong over there too, all over $1 million. Interesting to note a fraction of softening in the Strathmore area, because that's now just over $1.1 million, whereas Essendon has surged to $1,450,000, the largest median price Essendon has ever seen. But Strathmore has not followed suit. A couple of years ago, they were only about $50,000 apart. Now they're about $300,000 apart. So it'll be interesting to watch if Strathmore has had a quieter period. I think that's probably the case based on low stock levels. Hardly any homes for sale, particularly in that centre part of Woodland Street to the freeway, hillside across to Carnarvon Road. Not many homes for sale in that really keenly sought after area. So that's all about the numbers, the zeros, the $1 million mark, and over 100 properties reaching that median price. Another interesting statistic is the surge that you all have read about and watched on TV about the surge in building development approvals, especially for units. And those units have absolutely split the line between homes and apartments. Now, just because an apartment is approved doesn't mean it ever gets built. And what we're seeing, if you look at the Age and the Australian Financial Review during the week, there are many development sites for sale. Consequence of, number one, people are saying, well, I bought the land for X, I've now value added with a planning permit for 20, 30, 40 apartments. I can probably make more money out of this by selling my block of land with a value-added planning permit than I can by actually going and building. That's one aspect. The other is that people have tried to sell the apartments off the plan, haven't reached a sale either by dollar terms or volume, where the banks will lend. So they haven't met the appropriate thresholds, mainly about dollars, where the banks are satisfied they can lend with good security. Another thing to consider that is an influence in that with the banks is the failing rate of settlements, where many overseas people are failing to meet the settlement commitments and either struggle to get there in the end or don't get there at all, and they sacrifice their 10% deposit and they re-enter the marketplace. So interest rates on hold once again. Melbourne Cup Day, everyone was more interested in the Melbourne Cup than they were in interest rates, but it just shows steady as she goes mentality there. I think everyone will wait and see what happens with the Hillary Clinton and Donald Trump episode over the next week or so in America, what influences that has to world economic situations. We'll wait and see with interest what goes there. And finally, a rental wrap. Now, rentals has been very, very busy. I looked on Domain yesterday and had a look, and gee, there's a lot of apartments for sale, for rent, and that's a real influence in just calming down rents a little bit. Just under 90 properties for lease. We did complete leasing in October, and we've got a big book of lettings coming up to our busiest time, November, December and January. People move out over the Christmas break and they reposition for schools, for hospitals, for universities. All of that happens over the January period. So thank you for watching our November 2016 Market Snapshot, and we look forward to seeing you just before Christmas for our December wrap for 2016.